Greetings, this is Greg for Tesla Fan Insight. My talk today is focused on stock volatility for Tesla and what we're going to see over the next 6 months to a year. This is Greg for Tesla Fan Insight. Wie geht's? Zdravstvuyte. I wanted to do a brief talk today on stock volatility. I had a chance to be exposed to some work that's been done by one of the top Wall Street analysts on Tesla. And one of the notes that was made was that the risk and uncertainty are the two things that Wall Street really hates. And what I found interesting is that the process with how Elon Musk handles the press and the rollout of products and services is the antithesis of how all the other companies and auto companies tend to do business. And I believe what this does is it creates an environment that suggests that Tesla is not a credible company. And so very small, subtle mistakes on Tesla's part can result in significant stock moves, even though, that's not the case. So right now we're in an era of, I want to say, post-Enron, post-Bernie Madoff, post a number of companies that have imploded quickly. And, to some extent, I would argue that the folks who are shorting Tesla stock and looking for or trying to help generate a disaster are not way out of line. There's a part of the Tesla success that's driven by, in essence, making moves that are bet the company moves. Most of them have been well thought out and been successful, but not everything has been hugely successful. And so I think that what's been happening is that Wall Street has been doing a process where anytime there's a fly in the ointment that's shown, there's an aggressive move down in the stock price because the narrative of the negative side of the Tesla process can really be hyped up successfully. I already discussed the fact that Tesla has a process that's Silicon Valley driven that's called fail fast. So as you have other manufacturers competing, executives protecting their jobs are trying to make sure decisions are made and reviewed over multiple years so that they don't cost the company a lot of money and the executive their job. This process results in slower time to market and a loss of I want to say, first mover opportunities that come with it. So Tesla is more inclined to get products or services out there early and let the marketplace decide if they're going to be successful or not, and then shift based on what occurs. A great example of this that I thought was interesting, that it was a bet the company move, was batteries. Elon Musk explained that he did not want to get into batteries, but when he tried to place orders for large-scale battery counts, he was informed that there's no way that he could get that battery inventory to do 500,000 cars a year. So the thrust of my talk right now is really just to focus on the fact that I expect volatility to be the watchword for Tesla's stock for a whole bunch of reasons. Number one is that it's one of the most heavily shorted stock in the stock market. Number two, Elon likes to make moves that are long-term oriented, that are smart, but he also doesn't like to explain to Wall Street how and why those moves are being made, and they can see the success later, but he's immune to being forced to make sort of moves that are sort of Wall Street optimized, if you will. Number three is the fact that there have been some hiccups. I mean, there have been some shipping issues that affected, the stock price recently went from 380 to 310, and it was driven by there being a 2,000 or 3,000 light number of units sold for a certain period. So this is an example of hiccups that have occurred that can slice 10 to 15% off the stock price. I frankly consider these buying opportunities Because if you read the data, what you'll learn is Tesla has between a 5 and 10-year advantage in battery technology over competitors. And that advantage doesn't go away overnight. Yes, there are a bunch of competitors introducing products, especially VW, for example, but it's one thing to introduce a product. It's another thing to be able to get batteries for that product at scale. So there's I want to say, a scrambling effort to catch up, but the reason it's a great buy is the gap in advantage is so huge. In one of my future videos in the next couple of days, I'm looking forward to doing a presentation on the fact that I believe over the next 2 or 3 years, Tesla is going to become so successful that they're going to have to break up the company. So I think it'll be worth your time to come back for this one, because when I'm done with my thesis, I think you'll be satisfied that it's valid. So to close out, my long-winded statement to say is this: I'm expecting a lot of volatility in the stock. The reason is uncertainty and risk are two things that the market tries to control, and Tesla does a very poor job of assuaging the uncertainty piece, because when they're trying to make Wall Street feel there's certainty, they're also having to give away details that competitors can use to sort of close the gap. So I think there's a conflict between the two, and this results in volatility for the stock. But I think on those dips, they're all great buying opportunities. I want to thank you for taking time out to visit with us today. Please like and subscribe. This is Greg for Tesla Fan Insight. Tschüss, mach's gut, au revoir, à tout à l'heure, lahitro, Khoda Hafez.